Hi, okay, we're going to get started here. Again, welcome. It's Mary Ellen McGonagle, and today we are going back to the basics. Very, very basic. We're going to be reviewing how you can read a chart. So it is going to be primarily for those that are not really tuned in to what the charts may or may not be telling them. So that is going to be the focus today. So again, welcome as we go into this long weekend. We're going to do a refresher and get everybody tuned in to how to read price charts. And so let's go ahead and get started. For those of you not familiar, I do have a lot of experience both on Wall Street and working with Wall Street. And most recently, for 15 years, I was with William O'Neill & Company, and I worked with a lot of top portfolio managers and analysts, working with them with the same idea, really advising on how to interpret what the chart is telling them, how to use price charts to their advantage, because a lot of the institutional, of course, the professionals, they know a lot about the fundamentals of the company that they're reviewing. They've gone, they've visited it, but when you can marry that fundamental knowledge with a price chart, that's where the real power comes in, and that's where the real top performers are going to be. They can interpret that chart. And so more recently, I do have my own research firm, MEM Investment Research. I continue to work with institutions, but more of my focus these days is working with self-directed investors. And I'm thrilled at the opportunity to be able to share my many, many years of experience and helping individuals to profitably trade the markets. And so very briefly, this is a disclaimer. I'm going to have just a couple of examples, but it's important to know that there are not going to be any precise buy or sell recommendations. The charts are going to be purely for educational purposes. So let's go ahead and get started with reviewing what we're going to go over today. And the first is, what type of price charts are best? And not only are there various types of price charts, there are also those price charts come in various time frames. So we will get into that, and to help you uncover with your trading what type of price chart would be best. And then, yes, so we talked about the charts having various time frames, and a lot of that is, of course, going to have to do with your style of investing. So if you're shorter term, perhaps a day trader, you will use a shorter term chart and so forth, but we will get into that. And then there are 5 key ways that you can use these charts. And once these charts begin speaking to you, it's going to be really quite powerful. And then I will do a bit of an introduction on some of the overlays that you can put on top of your price charts. And then lastly, we'll just pull it all together, again, with an eye toward informing you, opening the window, if you will, or the door, and giving you insight into how to use these price charts. So let's go ahead. We can start at the very beginning. I mentioned what type of price charts are there. There are line charts. Bar charts is another example. And then there are candlestick charts. These are the 3 primary price charts that are available to individuals that are trading, and we'll get into those. What time periods are these charts? And I've listed here the daily, weekly, monthly, and intraday. These are the different time frames that these price charts come in. And of course, intraday can then vary, 15-minute, 1 hour, and so forth. But we'll review the one that I find to be most helpful for intraday trading. And so let's get started. This first one is quite simply a line chart of Apple. It's a 1 year. And so what we are looking at, of course, here is the price history of this stock using a line chart. Now, these line charts are used primarily just for informational historical purposes, for actual trading, you are going to want to use the other charts, of course, but these are available on many websites, and it just gives you a quick glance of, is the stock higher than it was a year ago or a month ago, and so forth. But let's go ahead and review a bar chart, and this is that same Apple stock. So each bar is representing 1 day of price activity. So what I wanted to tell you is, on these bar charts, the high, the low, and the open and the close are represented on here. So what you want to pay attention to, for instance, is on this vertical line, there is a bar that sticks out to the right, and that's telling you the closing price. And then if you see another bar where it is to the left, that is telling you the open price. So these bars do contain quite a bit of information, and there are traders that certainly use these. I can tell you from my work, I tend to like the candlestick charts. They are even more informative. They also have the high, the low, the open, and the close. But these candlestick charts, for those of you that are not familiar, they have various formations that can be formed in these charts with various names: falling star, doji, and so forth. It's really worthwhile to take the time to dig in a little bit more and understand some of these characteristics. I mean, this particular bar is viewed as quite bullish, but we won't get into it here. But again, bar charts can be really quite helpful, not only in informing you of if the stock is in an uptrend or a downtrend, but again, each individual bar can be informative. So let's go ahead and review. I mentioned that I've found 5 distinct ways that price charts can help you. And one of the first is certainly helping you define a trend. And that trend can, of course, be either up or down. So once you've identified an uptrend, you, of course, want to have the tools. You want to know how to read that chart so that you know that that uptrend, if it ends, if that uptrend reverses and becomes a downtrend, you want to be able to identify that. And then, of course, a downtrend reversing into an uptrend is another way. But using these charts, you will be able to do that. And then also, you're going to be able to identify buy and sell signals. You can really pinpoint your entry and exit points by using these price charts. You're also going to be able to determine the health of the broader markets. Are the broader markets in an uptrend? Are they still correcting? These charts are really going to be super powerful in helping you in that regard because, of course, before putting money to work, you want to make sure that the broader markets are healthy. And then you can see if a stock is finding support. This will make more sense as we review a couple of examples, but this is referencing if a stock is in an uptrend, you want to make sure that that uptrend is still in place and the stock is finding what we call support. And then we talked about this a little bit earlier, is spotting a reversal of that current trend. So all of these are going to be really quite powerful and important for your trading. So let's go ahead and get started. This is a monthly price chart. We're looking at a 10-year time period of Apple. A lot of these charts I'm using are not current because of the recent volatility. The extreme volatility in the beginning of this year really made using a lot of these charts they're not quite as informative. So what we're looking at here again is a 10-year. So each bar is providing you with 1 month of the high, the low, the close, and so forth. But this monthly price chart, what I wanted to mention to you, it is used primarily by professional investors. And as we drill down into smaller time frames, I think you'll understand why. But I'll tell you now, it's because these longer-term price charts smooth out a lot of the noise, if you will, a lot of the volatility, and it allows longer-term professional money managers to stay with the stock. They won't get whipped out of it. And also, a lot of times we talk about stocks coming out of bases or turning positive, and you will find that signals on the monthly tend to be more forward-looking. So just an eye out for that. But there is a place for the monthly chart. And so here is that very same monthly Apple price chart. And what I've done quite simply is overlaid 3 of the most powerful indicators that I have found in my many years of going through thousands of charts each week. I've found these 3 to really be quite simple, easy to use, but equally powerful. So what I want to point out to you here is on that monthly price chart, I've put a simple moving average I've overlaid. And for those of you that are interested, the monthly price chart, you're going to use a 6-month simple moving average. And here is when I talked about the stock finding support. The stock enters into an uptrend. In other words, is the stock price retaining a position above that upward trending simple moving average? And indeed it is. It's just quite simply, for the most part, bouncing off of that upward trending simple moving average. Let's take a quick peek at this upper indicator. It's called an RSI, and it's a relative strength indicator. It is a momentum indicator. I do have other courses that get into all of this quite a bit more, but for today's work, what I'm trying to point out to you is the power of these indicators. So quite simply, you want the slope of the RSI to be upward, and then as it crosses this dashed line, that's net neutral, it is turning positive. And then below is another momentum indicator. It's called the MACD, Moving Average Convergence Divergence. So your black line is the MACD line, the red is the signal. So you're keying in on crossovers. So at this juncture, it is turning positive, the MACD, positive crossover. We can marry that with the positive movement of the stock above this key simple moving average. And then also we have the RSI. So now we have 3 signals that tell us that the stock very well may be entering into an uptrend. And you can see, in fact, this was a multi-year uptrend. This is taking us to back to the 09 recovery. And the stock did go on for quite a bit of time. But again, these charts are going to be your guidepost, your signals to help you, in this case, identify an uptrend. So now we're looking at a weekly price chart, and again, we are using the candlestick charts. And here you can see how much more volatile the stock appears, as opposed to, I'm going to dip back to that monthly, and it just looks quite smooth, not a lot of back and forth. But on a weekly, you will get a lot more information, of course, but then a lot more of this up and down. So, but equally informative. The weekly chart is very, very, it's a chart that I use very widely, and I marry this with a daily and then sometimes an intraday. But, you know, again, what I'm pointing out to you is that you will get a little bit more whipped around on that weekly. But let's go ahead and take a look. This is that same weekly price chart. And again, I have overlaid those technical indicators that I mentioned to you. I'll quickly point out that the simple moving averages are going to be different on each time frame. So the red line here is a 10-week or a 50-day. That translates, 10 weeks translates into a 50-day. And then the blue line is a 40-week or 200-day. And these are the 2 most commonly used simple moving averages on your weekly price chart. And then, of course, I have the RSI above and the MACD below. And as I mentioned to you, equally powerful regardless of the time frame, because here we are. This is a different period because we're only going back 3 years. This is the first quarter of 2014, when Apple did have this move up. I'm trying to see if I can get my cursor to cooperate. But what I'm trying to point out to you is right here, where the stock broke above that 50-day moving average. And if you can see, the MACD had a positive crossover. And then your RSI trended and turned positive as well. Now, I will say you could easily make the case that that occurred here, and it did, but if this uptrend is not going to stick or does not have legs, usually it'll fail pretty quickly. So we have these positive characteristics, but once the RSI does begin trending downward, it's not going to be as interesting as in this case, of course, without knowing what is going to happen to the right, but you can see that it did, in fact, the RSI remained quite positive until we get to this period. And this is when I talked about knowing when it's time to exit, when that uptrend has ended. But let's take a look at this head fake here, where it did appear it broke the 50. It would certainly get anyone active in the markets certainly nervous, but take a look at how the RSI still remained positive. Once that RSI breaks in conjunction with this break, you can give it more credence when you have at least two of the three signals at the same time. And so you can see this uptrend is much more clearly broken at this period, and it does, Apple did go into a downtrend for quite some time. So now we are looking at Apple again, and this is a daily price chart. And I'm sure you can see how the daily price chart is even more volatile. You're getting a lot more information, but it is a lot more back and forth. And so the daily chart can be helpful for certainly day traders, but even longer term, because you are going to be informed from a daily chart as well. Here is that same chart again with those technical overlays. And for the daily, you're going to use a 10-day simple moving average. That's your green line. And then the red is your 50-day simple moving average. And then I have an additional blue line. It's 200. And so hopefully what you can see here are the same principles in action, where the stock's in an uptrend, it's finding support at this shorter term simple moving average, but as it breaks, so too do your other indicators. So you're marrying that, and the stock does enter into a downtrend. It's not until over here that it gets positive again. But again, I'm pointing out to you how powerful these overlays can be as far as helping you pinpoint your buy and sell decisions. I don't have a heading on this, but this is an intraday price chart for Netflix, but we can go back to that because what I wanted to first start out with is Apple, because we're in a groove here with Apple. This is an intraday, and I like to use the 15-minute price chart. I know others like to use 60 minutes and so forth, but the 15-minute for my work, I find it's really quite useful. And again, intraday, even more volatile. But for those of you that are active, certainly recently the markets have been super volatile. So these intraday charts have been helpful for those that trade intraday. So let's go ahead back, and I'll point out to you again, this is an intraday, a 15-minute price chart of Netflix. And what I wanted, the reason I pointed this one out is because this is the type of uptrend, certainly for every intraday trader, that they would like to get in front of. And this is about a 2-day uptrend. So let's go ahead and move down further on that intraday and take a look. This is a marked up version of that very same price chart intraday of Netflix. So again, we have those same key indicators that would put you in front of this stock potentially. This is something that over time, as you begin using them, your confidence will build so that you can have, again, confidence in the sense that the stock could, in fact, be entering into an uptrend. but we are again using the RSI turning positive, your MACD turning positive. I've added the volume characteristic here. And so the stock, again, as long as everything is positive, it enters into this uptrend, and it is still above that net neutral, but you are getting signals that the uptrend at the very least is pausing. So I did want to point that out to you. And then here we're looking at a weekly price chart. This is Barrick Gold Corp. We're going back a little bit in time here, but again, everything we're reviewing is certainly relevant today. So what I wanted to point out to you is this is a stock that had a downtrend that lasted for a little bit over a year. And so if you like to play those downtrend reversals, if you will, again, we're keying in on the stock price. This is a weekly, breaking above these two key simple moving averages. The red is the 50, the blue is the 200-day. So it breaks up above. That's wonderful. But then when you can marry it with these other indicators, as far as the RSI turning positive, your MACD is now above zero, net zero, so that's viewed as positive. So now we have these three signals in place, and it also occurs on high volume. That's going to be a fourth indication that it very well could and is reversing that downtrend. And I wanted to point out the difference between this, let's go back, the difference between this as opposed to this. So here, ABX broke above that 50, kind of interesting, but not really. Your RSI is still super negative, MACD is below zero, and your longer term simple moving average is in a downtrend. It's not, and it's in a downtrend here as well, but more importantly, your shorter term 50-day is now in an uptrend. So again, using other time period, here's another time where it tried to break up, but you do want to incorporate it with these other signals to give you that powerful sign that in this case, the downtrend is reversed. And then here's another 15-minute intraday chart. And what I wanted to point out to you here is, again, the stock breaks down into this downtrend. How do you know that the downtrend is still in place? Well, the RSI remains negative. It goes into what's called oversold. That means it's below 30. And oversold is fine. Above 70 on RSI is overbought. It can remain there for any length of time, but it is telling you that at some point it's going to turn. And indeed it does. So again, these are how you can use all these different indicators together as a way to guide your trading. And then one last thing, just to get into, there are other ways in addition to those simple indicators, are looking for what are called price patterns. And what I've highlighted and pointed out here is called a saucer base. This is one of the more common what are called bases. And in essence, these bases oftentimes are digesting significant moves that may have occurred prior. And it's for those that may not have gotten in, it's providing you another opportunity. So it attempts to hit a high, fails, and then as it comes back out and breaks above that, that's when it gets interesting. So I have a lot of work on various patterns and how really important they are in helping you identify stocks poised to go higher. And then here's net teas. This is a daily price chart. And again, in this case, we have that saucer base where it breaks out of that base. But now I've overlaid these indicators and it's being confirmed by the RSI and the MACD. So you have even more confidence that the stock could go higher. And then, of course, we do need to talk about when an uptrend is reversed. I know we've reviewed that a couple of times, but it definitely bears repeating because, of course, you want to retain your profits and keep your losses to a minimum. That's what's going to keep you in with trading. So here, what I'm pointing out to you, quite opposite from the uptrend, is what to be on the lookout for to give you signals that the uptrend is reversing. So we are looking at a daily price chart, and the RSI begins to trend negatively, and it can do that and bounce off. But once it does come below that net neutral, and you can marry it with this type of break below the 50-day, that's your red line. Your 10-day shorter term is now in a downtrend. That's ominous. And now your your MACD is poised to go below this net zero. So again, these signals are really going to be super helpful in getting you out of a stock when the uptrend has been reversed. So how can you read charts properly? Well, you do need to find the indicators that speak to you. The ones that I've reviewed today, again, I have found over my many years to be very powerful. Others might find, I know there's our Fibonacci out there, Bollinger Bands. There are other indicators, but it is going to be critical for you to uncover and use indicators that not only speak to you, but that you have confidence in. And that's going to be really important, because when those signals are given off, you want to have the confidence and take action accordingly. And then also use the time frame that suits your style best. And we did review that the monthly chart is longer term. It smooths out a lot of that intraday action. Weekly and daily are perfect for perhaps the intermediate term. Maybe your trading is 2 weeks to 2 months and out. And then, of course, the intraday for those that enjoy getting in and out of stocks on a daily basis. And also, I hope that you were able to see how you do want to use multiple signals. The more signals that are flashing either positive or negative, that's going to be more giving you more confidence to take action. And then I talked about the broader market. And when you are using those indicators that I mentioned, when you're looking at the S&P, the Dow, or the NASDAQ, you do want to use the daily and weekly price charts. Those are going to be the most powerful and useful in identifying where the markets are as far as whether they're in an uptrend or a downtrend. I do a lot of work with that with my biweekly newsletter. For those of you, you can shoot me an email and I can provide you with a deeply discounted 4-week trial. Our support team is very helpful with that kind of thing. And again, we do a lot of work there identifying the broader market's trend, where we are, what we're expecting in the upcoming week. And then from there, we drill down to identifying where the strength is in the market, and then drill down even further, identifying stocks that are poised to outperform the broader markets. So it's we have a lot of very pleased subscribers to that. And so let's take a look at some conclusions. Knowing how to read your charts, I will argue, is the most important tool when you're analyzing your stocks. Otherwise, when you enter the broader markets and you're looking at a lot of stocks, you need a way to be informed, and these charts are going to do that. If you don't have a chart, I would say it's akin to going on a treasure hunt without a map. You need to know how to read these charts, and then also learning how to interpret these charts. It will take time and practice. For those of you that are here today, this is new to you. It may appear confusing. I can recall as if it were yesterday the first time I saw a marked up chart, and I thought it was a chart of a earthquake, seismic. It was very, very confusing, but it does come to you over time, and it is a skill that is very, very worthwhile, and actually I would say needed to have. But if you are finding the charts that we reviewed a little confusing, it takes time, and you need to allow that time and practice. Of course, I have other courses. There are other courses out there that can really help you even further. And then using price charts together with those technical overlays that I mentioned really is going to bring your trading to the next level. It's going to provide you with even more guideposts, if you will, as you endeavor on your trading. And educating yourself on how the markets work and which tools work best is another piece of the puzzle. So the markets are exciting, they're wonderful, but there are nuances within the markets as far as how they behave relative to headline news or and so forth. So again, all of this just reminding you to please don't get frustrated. It takes time. Give yourself that time, and it's really going to serve you well. The markets are a wonderful way to supplement income. I have a lot of traders I work with that are trading full time, and yeah, but it certainly does take a little bit of time to get in the groove, so to speak. I didn't mention this, but I have a special offer, and at the end, I usually do this at the end of my webinars. Today, it's all about simple moving averages. That was one of those 3 indicators, and over my many years, I have found simple moving averages to be far and away the most powerful. So this simple moving average, it's an audio video course, and it is designed to, again, key you into these simple moving averages, how to use them not only for individual stocks, but for the broader markets. And it is a 40-minute course, and normally it's $197. So if you use the link at the bottom here, you can access it for $9 today. So I urge you, take advantage. This is a great way to keep your education going and keep you informed. Now, I did not mention this, but I'm very willing to answer any kind of questions that anyone might have. And the first one is talking about the audio. Okay, I apologize. I guess there was someone else on the audio that was breathing hard, and I am so sorry. I don't know. That may have been one of the moderators. I apologize for that, but hopefully you were able to hear my what I was saying. But I'm wondering if anyone has any questions relative to what we covered. And it's Catherine, yes, there is a recording that has been made, so you will be getting that. And Ed Page wanted to know, I shouldn't use last names, but the discount for the 4-week trial, normally it is $97 for a month, and you can trial it for 4 weeks for $7. So I would tell you that would be money very well spent. So if you'd like, shoot an email to our support team and they'll go ahead and get that link out to you. And then Anthony wanted to know why I use simple moving averages versus there's another version of moving average called exponential moving average. And exponential moving averages are faster moving. I have used them on intraday charts, but I will tell you that the simple moving averages, I'll put it this way, they are more widely used by institutions, and institutions by and large make the markets. About 80% of the volume you see every day are these institutions. And so in essence, you want to be on the same page as them. That's one reason. But more importantly, they've worked. They're a version of the moving average that I've found to be really quite powerful. So that is why. And Manu wanted to know, are entry and exits taken from intraday or daily charts? And that question, as far as what chart to use, is going to have everything to do with your style of investing. So if you are intraday, you want to get in and out on a daily basis, that's the chart you're going to use. If you don't want to sit in front of your screen all day and you want to stick with a stock for longer term, you would use a weekly. And certainly for a lot of the big, I have a course that's going to be launched in about a week, and it's a master course, and it's all about getting in front of these big, super big winning stocks that go on for 18 months or more. And for that, you will want to use a longer term chart. It's going to keep you in. You're going to be able to take advantage of these long multi-year uptrends that are in some of these big winning stocks. And Patricia wanted to know where to find the charts. And today I used stockcharts.com. They do have a free version. As a matter of fact, while whoever is left here, I'm due to start a show on stockcharts.com a week from this upcoming Monday. So tune in. It's a great website. So that's one way. And then also, what time of day do you feel that the institutions typically move in or out? And that is a question that I'm not certain. So I could guess, but I don't know. That I sit with money managers and we talk about stocks. They pick up the phone and call their trader. I don't know that it's any particular time of day. I could be wrong. So I said I wasn't going to guess, and I did. And then, Patricia, where do you get the chart overlays? Again, stock charts is what I use for my presentations. I use them a lot, really. And if you go to their charting page, at the bottom, they have all kinds of various overlays that you can use to your delight. And they have two different areas, and I think it's pretty self-explanatory, but they do have those overlays. And you found them. Super. Okay. And then put the special link in the chat box. I was hoping that that was something that was taken care of. Well, I apologize for that. But if you want to shoot me an email, I can get you that link. And by the way, the website is meminvestmentresearch.com. And we have a contact form there, and I apologize for not having that in the chat box because this really is quite a great offer. So I hope there are those that can perhaps copy and paste that link down at the bottom, and you'll be all set. We do have some other questions here. What time frame, day, week, or more than 1 week do you recommend for swing trading? Okay, yes. So swing trading, by and large, what time frame chart or time frame of investing? But for the chart, you can use a daily price chart for swing trading. And I know usually those trades last anywhere from 2 days to 2 weeks. So that daily combined with the weekly is going to be really quite powerful for that. And my email, if you, it is maryellen@thememgroup.com, or you can go to my website, meminvestmentresearch.com, and go ahead and access the Contact Us portion, and we'll get right back to you. Susan, you want to start the class in June? Yes, that is when it's going to start. That master class is going to start June 4th, and I will give you the name of the stocks. Susan, I'm trying to determine your question, the name of the stocks to have the winning trade. Well, yes, certainly we will be pointing out some potentials, and my newsletter does the same thing each week. It's a bi-weekly report. And Catherine wanted to know the cost of the masterclass. It is $9.97, and it is a 5-week, 5 series, and it also has tons of bonus courses that are included with it. So it's really, really quite comprehensive, and I've gotten super great feedback from those that have gone through it. They're still pleased clients. So it's been wonderful to be able to work with people and see how it's changed them and their ability to trade full time. So I don't see any other questions, but again, feel free, please, to reach out to me via my website. And I always enjoy engaging and, of course, giving guidance to anyone that is interested. You don't have to be interesting. Let's see. I do have another question. about the $9. Now that's just a course. That's today's course. It's focused only on simple moving averages, but it is very powerful. And so, yes, you can, Anthony, you can get a discount on that newsletter if you go ahead and shoot me an email. We'll get that out to you. And great, Mitchell, thank you. And Banu, you're welcome. And great to hear from you, Walter. Yes, thank you. And as said, would love to hear more from each and every one of you, but for now we can sign off, and I hope you have a great, it's going to be a long weekend here in the US, so the markets are of course closed on Monday, so hope you guys put that day of rest to good work, to good use. And thank you. And thank you to everybody, and you're welcome.